rates and the U.S. dollar cheap as a way to boost asset prices and stimulate a recovery. Gold is denominated in U.S. dollars, so a decline in the greenback makes the metal, along with most other commodities, cheaper to buy on the global markets. Investments in hard assets will be good buys in the future as Chairman Ben Bernanke of the Fed and the rest of the Fed continue the liquidity-friendly policies, according to Mark Faber. And we've heard that in the past from Jim Rogers, also Larry Berman, who's on the Canadian Business Channel, them saying they've gone to conferences dealing with top-flight investors, and really there are not a lot of people involved in this market. I recently had somebody say to me that that silver could go down as fast as it went up, and I said, well, what's changed? The fundamentals have not changed one bit. What would cause that to happen? And I said, do you own silver? No. When everybody owns silver, that's when we'll know, Harold, to get out of this market. But we are so far away from this, it's not even funny. In fact, I've always said to you privately, silver, we've said this for 9-10 years, has been a mispriced asset. And because they've finally gotten a stranglehold on some of these manipulators, and it's come to light, we're finally seeing silver do what it should have done years ago. And it's very conceivable that we could see, in the short term, $50 and even eventually up to $100 when you take into account the price of gold, platinum, and palladium. It's not unreasonable to think that silver could go to $100. In relation to those other metals, it would still be very, very cheap.
You bet, Randy. Again, I'm with you 100% on that, and I don't think that we're anywhere close to the high of this market. So, I traded these markets back in the late 70s, early 80s. I've been through it. I've made notes on it. I've kept notes, and I've studied it. So, again, 10 years ago when I saw changes coming in the economy and things that, sort of reminded me of the mid-70s, that's when we started telling our clients to get out of stocks and get into the metals markets. And obviously, you could have bought 10,000 ounces of silver when we started the show for $40,000. Now it's worth over $400,000. Again, I couldn't be more pleased with our recommendations, but I'm just the happiest for our Canadian clients because, again, we've been through this for 10 years now, and the fact is that we've done extremely well, but I still believe the next 5 years are going to be the best 5 years we've ever seen in the marketplace. And again, with what's upcoming with inflation and the fact that we're sitting very strong in hard assets, mostly in diamonds and silver and gold, I just think the next 5 years we're going to make a fortune for our listeners and clients. And again, that's what this show is all about.
To invest in precious metals, there's only one company that Harold recommends. That is Worldwide Precious Metals out of Vancouver. Deal with a Canadian company. Own physical precious metal, not paper promises, ETFs, or silver certificate programs. Own the metal, and even better, have it stored for you off-site. You can buy and sell with a phone call. We had that story about a month ago. Someone had $750,000 worth of silver stolen from their home. Obviously, that's a huge concern, storing it on site at your home. Have it stored off-site. Much safer. You can buy and sell with a phone call. Learn more about investing in precious metals. Call us 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. wwpmc.com, and obviously they're there to help you maximize profit, minimize the risk. In our newsletter this week, we have our chart of the week. We have our quotes and quick hits, also information on diamonds, gold, silver, the U.S. debt and deficit problem, the sovereign debt problem around the world, a pension crisis is happening in the United States, information on quantitative easing, inflation, interest rates, the oil market, currency markets, jobs markets, stock market, banks, more banks failed in the United States, and the real estate market. The real estate market in the United States continues to be a major problem, but for those that have family or friends in Australia, there is a housing bubble that is popping in Australia as we speak, and it will not be pretty for the people in Australia. But to give you an idea of what's happening in the real estate market in the United States, David Rosenberg had this week. new home sales have collapsed at an 82% annual rate so far in 2011. Yes, you heard right. The unsold inventory of new homes has expanded from 6.8 months supply in December 2010 to 8.9 months currently. Both median and average prices for new homes have sagged over 60% at an annual rate. It is still taking over 8 months, the median, for home builders to close the deal on a new home, 60% longer than you would see in a normal market. And according to the U.S. Census data, there are 3.7 million homes that are vacant and are for sale. This is nearly 30% above normal. According to the National Association of Realtors, there are 3.5 million homes that are occupied but with a for sale sign on the front lawn. That is 50% above normal. According to CoreLogic, there's also an estimate that 1.8 million homes that are distressed. The inventory pipeline of homes in arrears or in the foreclosure pipeline are going to be coming down the road. That is 9 million units of inventory. Not all of it has to be cleaned up since there's always some friction level of vacancies. But suffice to say that even with a reasonable set of assumptions surrounding what will happen to household formation and home ownership rights, it could easily take 5 years to mop up this excess supply and ultimately provide a firm bottom for the U.S. housing market. And Harold, I would encourage people to read the real estate section of our newsletter. Get the newsletter by calling us at 1-866-623-2002. But you look at the real estate market in the United States, and it is in complete chaos. And you factor in what's happening in the jobs market. And the jobs market, it's in really, really tough shape as well. In fact, some of the jobs numbers that we have in the newsletter are simply shocking. We have a great article, and it's too long to read. It's from John Crudell, and he actually says that the job numbers that came out here recently are completely bogus. But here's something to think about. More Americans leaving the workforce. Only 45.4% of Americans had jobs in 2010, the lowest rate since 1983, and down from a peak of 49.3% in 2000. Last year, just 66.8% of men had jobs, the lowest on record. Harold, we have about a minute left in this segment. You look at what's happening in the United States, and it's a very serious situation.
You bet. And people thought that the real estate problems were over. It's nowhere near over. We're still going to see massive downturns in the certain parts of the country, one being Florida, the other being Las Vegas, the other being California and Arizona. Now, there are some good deals around, but the bottom line is I do anticipate prices will drop probably another 25% before we see close to the bottom of this market.
Every portfolio should have an allocation of precious metals at all times, good or bad. Now, when you allocate the money that you have, you need to include precious metals in your portfolio for profit and protection against the falling U.S. dollar, which we're starting to see on a daily basis, inflation, the current, I know a lot of people believe we're out of a recession. I don't believe that. Current recession and the residue of the financial crisis and even geopolitical turmoil, we've really seen that here in 2011. To invest in precious metals, call us at 1-866-623-2002, the website wwpmc.com. We're going to come back and talk about diamonds. Lots of diamond auction results this week as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on April the 15th, 2011 at 9:12 in the morning Mountain, 11:12 Eastern. Show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show, you can go to HESradio.com, and listen to the shows archived. The telephone number to invest in precious metals, 1-866-623-2002. Call that number to learn more. Get our free weekly newsletter. We send it out free of charge by email every week. Would love for you to take a look at it. You can go through it in about 5-10 minutes, or if you want, you can spend hours. We put it together in a way that it's a quick, easy read, and you can keep yourself up to date as to what's happening in the financial markets. The website is wwpmc.com, telephone number 1-866-623-2002. Harold's website for investment diamonds, rarecoloreddiamonds.com is the website, rarecoloreddiamonds.com. The telephone number is 1-800-432-1022 to speak personally and privately with Harold about diamonds, 1-800-432-1022. And we have some amazing diamonds this week, the featured diamonds of the week. And Harold, these are amazing. He has the only matched set of vivid green diamonds in the world. You can see a picture in the newsletter on the website, rarecoloreddiamonds.com. Vivid green diamonds are even more rare than vivid blue diamonds. Very few people have ever seen diamonds as rare as the diamonds that Harold has. He also has a 0.52 carat radiant cut fancy purplish red. The vivid greens can be purchased as a set or with the red, and you could make it into a very rare ring. But absolutely stunning, the green diamonds. And Harold, we had auction results this week, and we can send those out to our listeners and clients. They can take a look at the auction results from Sotheby's and Christie's. But some of the diamonds went for some amazing prices during the week.
Well, you bet. And again, it's all a sign of the economy because, again, people are putting their money into hard assets, things that are tangible, things you can hold on to. And diamonds have always been that. Diamonds have always been real estate in your pocket, the only form of portable and private wealth. You could literally walk around with $1 million diamond in your pocket and nobody would even know it. But try to cross the border with more than $10,000 in cash in your pocket and see what happens. Basically, the diamond market is so important, and the information I'm going to share with you today is extremely important. I've been in the investment business for over 35 years, and I've been in the diamond business for a long period of time. I not only started off as a collector, but basically I've been through the inflationary times of the mid and late 70s and early 80s. And most people realize at this point that when you have high inflation, there's certain assets that do better than other assets. And during times of high inflation, stocks do not do well, but gold does. Silver does. That's why gold is sitting at record prices and silver is sitting at 35-year highs. But also the diamond market. The rare color diamond market is on fire right now. The fact is that this is one of the only assets that never declines in price, that is portable in private wealth, and there are certain diamonds that have very strong track records. So basically, when you look at what's happening in the rare diamond market, first of all, there has not been a new mine that's come online in the last 15 years that produces any colored diamonds at all. So the fact is, it's a diminishing asset. So as a supply and demand situation, the demand for colored diamonds, as you're going to see by looking at the newsletter this week and seeing what's sold at auction, the demand is extremely high, especially, now that we have countries going bankrupt and currencies going under and people not knowing where a safe place to put your money. It's always been in the diamond market. Now, yellow flawless diamonds, for example, which are some of the diamonds that I recommend very, very highly. These diamonds go up by about 25% a year. They double in price every 4 years. They've never, ever declined in price in the 35 years that I've been in business. And the fact is, during 1979 and 80, these diamonds went up 500% when gold and silver took off. We believe that that is about to happen again. There are very few of these diamonds. We just came back from the diamond show in Basel, Switzerland, and in Hong Kong, and both scenarios were the same. Yellow flawless diamonds were selling for a fortune. There was very few of them, and the fact is that colored diamonds were selling at absolute record prices. And the reason for that is that people don't know where it's safe to put your money anymore, and in the diamond market, it's always been a safe market. The other thing is that as we hit into inflation, again, in 79 and 80, a diamond that you could have bought for $5,000 turned out to be a diamond that you would have gotten back $25,000 for within 2 years. We saw a 500% increase in the price of colored and white diamonds during 1979 and 80. Now, white diamonds came crashing down after people dumped, most of their diamonds on the market. Now, that can't happen in colored diamonds because it's a 50,000 to 1 ratio. 50,000 carats of white diamonds equals 1 carat of colored diamonds. So again, where they were able to bring down the price of white diamonds by people selling their white diamonds in record numbers, the fact is there are so few colored diamonds on the market that didn't happen. Now, we're going to go through the same scenario. I'm starting to notice it at this point. White diamonds are on the increase. We've noticed in Basel a couple weeks ago that the Rappaport list, the price list for white diamonds, were 50 to 90% higher than were the year before. That's a telltale sign that we're going to start to head into a time when diamonds are about to take off in price again. There's so few of them available, and you want to own the highest quality. You want to own the yellow flawless diamonds. We're going to see in